After 39 years in the vault, I'm revealing Bernie Schaeffer's secret strategy that can double your money overnight. Hello everyone, my name is Bryan Sapp. I'm a Senior Market Strategist at Schaeffer's Research, specializing in volatility, short-term equity trading, and macro analysis. I've been with the company a little over 10 years now, and I hold a BS in economics, an MBA with entrepreneurship focus, and I'm also a CFA charter holder. Prior to working for Schaeffer's, I was a poker player. There are a lot of synergies between poker and trading. You're using impartial information to take risk and align factors in your favor that ideally will turn into monster profits over the long term. Today I would like to discuss with you our overnight trading strategy. And I'll start by going over 3 simple rules that we like to use for our overnight trader. Number 1 is to buy the dip or sell the rip. Number 2 is protect your money with perfect timing. And number 3 is to limit your downside. And now I'd like to delve a little further into each of those. In buying the dip or selling the rip, you're trading against a short-term trend, and this can oftentimes give you the most bang for your buck. In order to find areas that you may wish to trade against a short-term trend, you can use technical indicators as simple as support and resistance zones, moving averages, option and other sentiment indicators, and also potential news catalysts. Now, I would never advocate using any of these things in a vacuum, but if you were to overlay a technical indicator with an option and or news catalyst, that can oftentimes lead to big moves, and that's exactly what you want as an option buyer. Our second rule for overnight trading is to protect your money with perfect timing. Embrace intraday volatility to find optimal entry points. A lot of people think volatility is bad. As a trader, volatility creates opportunity, and lots of it. And this opportunity is further enhanced with the advent of weekly options that we've had here in the last few years. There are hundreds of ETFs and stocks that allow you to trade weekly options on, and that provides opportunity on both the short and long side. You can alter your entry times to best fit the current market environment. As many of you know, we're in a highly volatile market right now. By using weekly options, you can limit the amount of time premium that you have to pay for these options, but still potentially ride the stock or the ETF for a big move, and that can generate huge profits. And the old market mantra is the best trades will work right away. You allow your winners to run and you limit losses, and that's exactly what we're doing with the Overnight Trader program. Our third rule for overnight trading is to limit your downside. Now this is trading 101. You let your winners run, you close your losers quickly. In our overnight trading program, the following day we will either close a loser the next morning, or we'll take a partial profit on winners and then allow the rest of that trade to play out and allow convexity to work in your favor. Now as an option trader, you must be familiar with the concept of convexity. A small move in a stock can typically lead to a huge move in an option in an overall gain. Another benefit of this is you have limited time decay overnight. So in the event that you don't get a big move in your favor or you get a small move against you, you're really not hurt that badly on the option trade. And as a result, over time, our average winners are much bigger than our average losers. I would now like to take a few minutes to look at a trade that subscribers in our overnight trader service received just a few weeks ago. And the trade was to buy to open the Peloton March 20 18 strike call at a maximum entry price of $3.10. This was entered on March the 16th, which was a Monday. And if you look at this chart, you'll see the green arrow, that's where we entered. The first red arrow is where we took a 50% profit, and then the second red arrow is actually where we exited the rest of the trade. Now you may ask, why did we enter this trade? First off, it found support near its former half high, which this is something that we've found at Schaeffer's to actually add some edge over time. If you look at the chart back in December, the stock peaked near 36. Fast forward to March, the stock was trading around 18, and it made 3 lows right there at the 18 level, indicating that there may be some buyers there, that there may be some technical support for the stock. Secondly, on the day that we entered the trade, the stock formed a bullish engulfing candle. In the technical analysis world, engulfing candles oftentimes can lead to reversals. So you may get bearish engulfing candles at the end of bull runs, and you may get bullish engulfing candles at the end of bear runs. And this can be a sign that things are going to change here in the very short future. It was also oversold on an RSI basis, so the stock had been getting hammered and was setting up for, a snapback or a reversal, some sort of correction. The Friday prior to entering this trade also, Citron, which is a well-known market research firm, they initiated a negative research piece. And this was like the second or third time that they had come out and been bearish on the stock. So fundamental bears potentially could have been offsides, and you could get a situation where people continue shorting something and then they eventually have to cover or capitulate, and that's what leads to potentially the big move on the upside. And lastly, the options on the stock were very cheap. For those of you who trade Peloton, it's a highly, highly volatile stock. But looking at the option pricing at that given time, it was fairly reasonable. The stock was at 20, a little over 20 when we got in. So for the 18 strike call, we were paying right around $3. And this was on a Monday. So you had 5 days to let this trade play out, and you were actually only paying about $1 in time premium for those 5 days on a stock that has the ability to move 15-20% in a day. That's exactly what you want as an option buyer. And in our overnight trading program, these are the type of names that we like to trade because you get these huge moves. So had you entered this trade and had you followed our recommendation, you would have had about 160% profit in a matter of a couple days. This is just one example of many trades that we've had similar to this, where our subscribers have received huge profits on the upside. For those of you unfamiliar with Schaeffer's investment research, we've been around almost 40 years now. The company was founded in 1981 by Bernie Schaeffer. He initially launched our flagship option newsletter, The Option Advisor. We've been featured on CNBC, Forbes, Barron's, Fox Business, Bloomberg, Kitco, and also NASDAQ. The market's always changing, and so are we. Through time, the options environment has changed. The fundamental backdrop for the market has changed. A lot of things have changed. You've had the advent of computer trading, and we have to adapt with that. The old adage is you either adapt or die in the stock market. And we've proven through the course of time that we can survive all market environments.